Thanks, Amir. Good evening and good morning, everyone. I think it's something that we've been waiting for quite a while. I think ever since the finance minister in May of 2020, in the middle of the pandemic, had announced the approach of the government to open up the space sector for commercial activities. Um, we've had a series of policy-related aspects that have been taking place, beginning with draft policies being circulated for commenting by the general public and the stakeholders, and then finally resulting in. May I have the next slide, please, Samir? Resulting in just the early one, second slide. Yeah, resulting in these initiatives that I've set out on the screen with the geospatial guidelines in 21, the policy following shortly thereafter, the much awaited Indian space policy in 2023, which provided a more thorough approach and a statement by the government of India, which sought to liberalize a regime in the area of commercial activities in the space sector. But really speaking, all of us were waiting with bated breath for the updated FDI policy, because in the absence of that policy, there would be many roadblocks to the questions of how much investment is permissible, in what manner is that permissible, what are the areas which are likely to be regulated, etc. But now we have an answer, or I would say 75% of the answer to that question, with the amendments that got the cabinet approval to the FDI policy in the space sector. Can we move to the next slide, please, Samir? So I think a lot of you on this call perhaps would already have seen snippets or the entire portion of what I've projected on the screen currently. But before I get into that, it's important to know, for the uninitiated into the FDI regime of India, that there are essentially two mechanisms for getting to invest into any business in India for a foreign entity. These mechanisms are what are referred to as an automatic route and a government approval route. As the term suggests, the government approval route requires an application to be made to the relevant departments, whereby potentially the format is provided, the details that are required to be submitted are provided, and there is a deliberation that takes place, including perhaps meetings with the concerned proposed investor to seek answers to specific questions or clarifications that may be required. And it's only upon such approval, which is discretionary upon the government department, it's only upon such approval that the foreign investment is approved. As the automatic route, the term that is suggested is where you do not have to seek prior permission of the government. You only need to file the relevant information with the concerned authorized dealer, which will be a bank that is permitted, which has a license to operate, to have banking operations in India. So you choose your bank, you submit the documents there, you give the basis for the head under which you are bringing in the foreign investment. And as the automatic route, the term suggests, you're then allowed to bring in that investment and start the business. So with this backdrop, it's important to note that in relation, they've divided it into three parts, depending upon the nature of the activity. So in the case of satellite manufacturing and operation and satellite data products and ground segment and user segment, you are allowed to invest up to 74% of the equity in that particular company through the automatic route. The balance 26%, if you do want to go beyond 74%, then you will have to seek the prior approval of the government. In case of launch vehicles and associated systems or subsystems, etc., it is 49% that is permissible under the automatic route, and beyond that, you need government permission. For manufacturing components and systems or subsystems, uh, of course, you're allowed under the 100% automatic route. And I think the classification has been made with a view to assess as to what activities could have an interface with any of the other activities of business, realm. For example, some of these activities could easily be also used for the defense related aspects, and which is where, because of the concerns that are there in the defense sector, there is a higher threshold of investment would require the government approval. Can we move to the next slide, please? I've just indicated certain technical and operational challenges that are likely to be nevertheless faced. But we don't have too much of details on how this is going to be overcome, what the technical and operational challenges are going to be actually faced on ground, because this activity is only going to commence shortly. But from what I thought would be relevant for any businesses wanting to invest in India, these are the aspects that they should be aware of, which is to ensure that the technology transfer is done on fair terms, and there is a safeguard for the IP. If there are any on-ground operational hurdles in satellite manufacturing, etc., those need to be overcome. Of course, the question is, we are not the only country that is attracting FDI in this particular sector. There are multiple countries that will be vying for similar investments. So, do we have a competitive FDI policy? It's yet to be seen, because very often the devil is in the details, and because we are yet to have a more detailed prescription on how this policy is going to work, and specifically the rules, the foreign exchange management rules, which need to be updated and amended to give effect to this cabinet approval, is something which we will perhaps see how it's sort of the working of that takes place. Just balancing investment with long-term profitability. So, are we looking at an initial investment of, let's say, where there is a threshold of 74%? Do we partner with an Indian entity? Looking at that long-term profitability in question, make it work for a certain period of time, and then seek that additional 26%. How we're going to do that is, those are all aspects that are out there. Of course, the financial implications and operational risks and also the associated insurance costs. Next slide, please. Some of the questions that I've just set out here, of course, answers currently are not available because we get to test this. But the question, for example, is what happens to foreign entities who have Indian subsidiaries or associates who are operating in the newly liberalized sectors? So, perhaps in the absence of clarity on what exactly would be the threshold for making investments, if certain companies have made a higher threshold of investments, but the memorandum of association that they would have filed for their company discloses a set of activities where there is no requirement of prior government approval. Now, how will that change? Because you're really shifting to the essence of what the company seeks to do. Will the government agencies and regulators be sensitized about the different types of activities, space activities? For example, given that example, that there may be a service provider offering only a technical dashboard for monitoring satellite movements. And this activity may not invoke sectoral compliances under the FDI policy. However, will the government agencies categorize this activity to be exclusively under the 100% automatic route? We don't know. That's something that we will find out soon. And can Indian companies that already have foreign investments in certain sectors where there is liberalization, will they be able to invest in subsidiaries which are scoped in terms of the new regime? So, managing those complexities around the FDI route, what are the limits of the various subsectors, etc. There should not be overlap. How do you address where there is a seeming overlap? So, these are the kind of questions that perhaps will be thrown at advisors such as us, and we'll have to navigate that in the current climate to figure out what the solution would be. Next slide, please. Benefits, certainly, to my mind, this is another step forward. There is a harmonization of the geospatial and Indian space policy with this. There is certainly an impetus for greater development opportunities, employment generation, etc., promotion of technology transfers, creation of manufacturing opportunities, and of course, integrating the entire ecosystem of the space-related entities in India with the global market. So I think, as I keep sort of saying, in very interesting times, we are only moving forward in the right direction, but certain other details, once that is revealed, is where the clear path will be set out as to how the FDI policy and its intent is actually put into effect. Thank you so much for this.
Thank you, Abhishek. Thank you very much for those insights. I would now invite anyone if they have any questions to ask to Abhishek. Kindly raise your hand and then I'll invite you on the screen. All right, it seems nobody has any questions. So Abhishek, just to get a perspective before we move on, sorry, yeah, I think Vijayant has a question. Vijayant, please, over to you.
Hi, thank you so much. So my question is just on how this policy interacts with businesses like broadband satellite, because as we know, there is already under telecom 100% automatic route an allowance over there. So would this policy be covering businesses like broadband satellite, or will we expect the existing policy on telecom to apply over there?
So it ultimately will depend upon what classification is accorded. At the end of the day, in the event that there is the broadband industry itself will be specifically under the telecom route. But if it is concerning satellite, and depending upon how much of the business relates to satellite and satellite manufacturing, or the operation of the satellite, is it going to be the collection of data only? So a lot of that will depend upon which particular policy or which cap or which sectoral cap will apply. So I think the business will have to be evaluated in that sense, and perhaps till now, in the absence of a specific policy related to satellites in the space sector, if there was a utilization of the telecom route to be able to make that investment, then that may need to be re-evaluated. It may reveal the same answer. That means that you could potentially continue to be in the telecom space because that's preferable. A much higher threshold, 100% can be permissible through the automatic route. But it will have to be evaluated just so that there is a internal check that you should not be asked that question as to, now that there is a separate provision for the space related businesses, are you likely to fall into that sector or not? So I said, I mean, I know it's a little convoluted answer, but it depends upon what exactly the business is about and a detailed evaluation of that activity.
Thank you.
Thank you, Abhishek, for that response. I think now we have Raghav Handa from HSBC. Raghav, over to you.
Thank you, Samir, and Abhishek. Thank you. I think this has been very helpful and insightful. Just two specific questions. One is as an extension to the previous one. The whole communication piece, and I'm specifically, referring to a significant interest by some of the operators in pretty much this, in the space of LEO, right? So would communication setups continue to be under 100% automatic route? That's one. And then the second one is slightly more specific. So for companies who are supporting, say in, setups of, ground stations in India, would that continue to be under automatic, or does this FDI policy have any sectoral, sectoral kind of impacts, specifically for companies supporting, setup of ground stations in India?
So I think if you are to see the three heads, one of those relates to satellite manufacturing operations, satellite data products, and ground segment and user segment. And that's where up to 74% is permissible under the automatic route. Now, as I said, in the case, in my answer to the previous question also, where there was a lack of clarity as to what head that investment would fall into, perhaps you could avail of the benefit in your favor of using the telecom route to be able to make that investment, and therefore at the much higher threshold. However, now that there is a specification for the space sector where ground segment related products are clearly identified under the first head of the up to 74% of the automatic route, applying that principle of specific overrules the general, I would say that this would be the appropriate route to be taken. But as I said, maybe in order for the business to continue to be under that 100% automatic route, an evaluation may need to be carried out of the activity and see whether, in case of an overlap, is there a possibility of still staying within the telecom realm and be able to utilize the 100% route instead of necessarily having to shift to the 74% under the new policy.
Thank you. That's very helpful. Sorry, if I just may, probably just a small question to this. So when we say that there are these sectoral caps, right? So up to like 74%, 49%, and so on. While it might just be early for you to kind of comment on this, but any early indicators that you picked up from overseas investors, are they more inclined to kind of go under the proper approval process, or for the remaining share which falls under the approval route, kind of look at probably a local JV partner in India? So with that, they can keep their investment capped at 74 or 49%, which is under automatic route. And then, for the remaining one, are they more inclined for looking at local JV partners, if at all there are domestic capacities that kind of exist that kind of exist domestically, or are they more inclined, in terms of going through, the 100%, 100% as probably their was investments in India, with, the remaining ones, going under, the government, pretty much the overall application route?
So the default proposition that we've been hearing from companies and clients is that they would like to be in the 100% zone. Now, whether that 100% comes through a mix of automatic and government approval or completely automatic approval is something that they have to navigate to figure out as to, from a strategic standpoint, whether it makes sense for them to have a local JV partner or not. So the call to have a JV partner, to my mind, is going to be more a strategic call than an investment-oriented call.
Got it. Thank you very much.
Sure.
Thank you, Raghav and Abhishek. Anyone else has any question to ask Abhishek? All right, I don't think anyone has any questions. So just to lay out to everyone that also a discussion at the G2G level is currently going on regarding the activation of a commercial space joint working group. I think the FDI rules are very timely in that sense. So there'll be a lot more work under the US-India bilateral, specifically in the space sector. Thank you so much to Abhishek for sharing his insights. Now I invite Hamza from Access Partnership to share his insights on how this is perceived internationally, the FDI rules. Over to you, Hamza.
Thank you very much, Samir. Can I confirm that you can see my slides?
Yes, we can.
Okay, fantastic. So my sincere thanks to Abhishek for the excellent presentation covering a lot of the legal aspects of the new FDI rules in India. I think I was super happy that we stayed on that last slide about the anticipated impact for such a long time, and particularly the benefits, because I think that's sort of what my 5 or 10 minute presentation will add to Abhishek's excellent discussion of the legal and some of the policy related issues and benefits that this would accrue. I think this slide sort of recaps what Abhishek said. The new FDI rules give up to 74% automatic route on satellite manufacturing, operations, satellite data, products, ground segments, 49% automatic route in launch vehicles and spaceports and in launching activities, and 100% automatic route on manufacturing of components and subsystems. So I think from a policy perspective, when we looked at this and then particularly reviewed this from the perspective of those who are drafting these rules. This makes sense. So if you sort of analyze these different sectors, you can see them from their direct relationship to the defense sector. And I think the more relevant the industry or sector is, or closely attached to the industry or sector is to defense, the larger the requirement for that government route necessary, given the strategic importance of certain sectors in specific parts of the world. I think the next few slides will just go through the global investment picture for space, and particularly startup space in the last few years, and examine how India's relaxation of these FDI rules will really open up the possibility, or will really open up the option for investors to come in and put in large sums of money into the Indian space economy. I think that the relaxation of these rules is an excellent tool through which investors can be attracted, but then also through which innovation and scientific developments can be furthered. So I think before I start talking about these, I'd firstly like to give a big thanks to our colleagues at Bryce Tech, which have produced some of the graphics and charts and the numbers within the slides that I'll be using. So I think the study that I'll be referencing is this study called Startup Space by Bryce in 2022, and really defines a startup space venture as any company that has originated as angel or venture capital backed. And this categorization sort of helps them distinguish space companies or startup space companies, particularly in the private sectors, from those large aerospace and defense contractors and large publicly traded space companies. So I think this really reflects the growing space industry and is very much resonant of the types of industry that's growing now in India. And as you can see on the chart on the right, there's been a year-to-year increase, particularly up until 2021, in the amount of investment flowing into the space sector, and with various different types of investment flowing in. I think 2021 was a slight blowout in this particular situation, and that was particularly led by a large number of space SPACs, so special purpose acquisition vehicles, where lots of space companies did IPO through this innovative financing model, which whether it was useful or not is subject for another time. But I think 2022 sort of saw the restoration or move away from that SPAC model and more towards that sustainable way of financing space companies. And we've seen this trend continue to grow quite steadily. In fact, now that the 2023 and also Q1 2024 numbers are starting to come out, we see that the trends are continuing to move upwards. And just if we look at 2024, there was more than $8 billion USD invested in space startups across 154 different deals. I think it's important to highlight the nature of the types of investments flowing in and how these have changed over time. So you can see on some of the charts that I've put up on this slide that if you compare the chart on the left, which looks at space investors from the year 2000 to the year 2022, altogether, you can see, so 2012 to 2022, so that 10-year cycle, you can see that altogether there's been about 1,800 investors, with more than 422 of those coming alone in 2022. You can also see a large increase in the amount of venture capital that's flowing into the space sector, and we think that India's relaxation of the FDI rules for its space industry, and particularly through this automatic route, will make it a lot more attractive for venture capital firms from around the world to consider space companies in India as potential targets. And not only that, will also allow then different types of investment activity, particularly things such as acquisitions, to happen more readily. I think it's on this slide, it's also important to underscore that the average value of a single deal is about 53 million US dollars when it comes to investments into space. So we do anticipate that with the relaxation of this FDI, of the FDI policy, the space sector could see a large number of similar large investments, fostering significant growth and pushing technological advancement. Now, when you think of, the relaxation of FDI rules, you really should talk to yourself and see where investment in private space and startup space really is coming from, which is why this next chart is incredibly relevant and really illustrates where all of the investors in the space industry, and particularly in the private space sector, investing in space startups and new space companies are coming from. So I think just in 2022, as we mentioned, there's 422 investors that invested in startup space. About 47% of them, or 197, come from the US, but now a majority of them come from outside the US. And then you can see that a significant chunk of this is countries like China, Japan, UK, France, and in India. And then 24% of them are other investors from other countries. I think since the year 2000, there's been more than 1,800 investors from all parts of the world. And now with the relaxation of the FDI rules, a lot of these investors can easily consider or think of putting a lot of their investments into the Indian space ecosystem. Now, we'll recall from the first slide and from Abhishek's excellent presentation that the rules have been relaxed in different manners across 3 different types of space segments, or 3 different segments across the global space economy. So let's break those down, right? How much of an impact would go where? And so this chart comes from a global examination of the space economy, which in 2022 was worth about 384 billion. And you can already see that a lot of the sectors that have had a large amount of relaxation of the FDI rules are some of the ones that are amongst the biggest sectors or contributors to the global space economy at the moment. So I think we talked about the relaxation on ground segments. That forms about 145 billion out of the $384 billion space economy. I think manufacturing also forms a large chunk, which is about 15 billion. And then a lot of this is taken into services. I think it's also important to here particularly look at the fact that in 2022, in the $384 billion space economy, only 101 billion came from government budgets. And so this really reflects on how the space industry is now becoming increasingly private sector driven and private sector focused, and is really becoming a target for investors from all parts of the world. I think in conclusion, I really found this quote from the president of the Satellite Industry Association in India, Dr. Subha, very, very relevant, and in other remarks that were also made in this context, says that the relaxation of these FDI rules foresees more than $25 billion worth of investment into India's space economy over the next decade. I thought what was even more relevant is the suggestion that with this type of investment flowing in, by the year 2030, it is anticipated that space will contribute about 50 billion in GDP contributions to India, creating about 500,000 new jobs in the space sector alone. This compared to now, you see a $7 billion contribution to India's GDP from space with about 100,000 skilled workers. I think at Access Partnership, we see large capital inflows, lots of growth, lots of innovation, technological advancements, and also India being able to position itself as a global leader in the space sector through the relaxation of these FDI rules, and just by becoming more open to investment in the space sector from all parts of the world. And I think, ambitious programs such as the astronaut program that was announced just a few days ago, and other programs and missions really do underscore the important role that India plays in the global space economy. So any of the listeners want to reach out or examine the impact of these rules, particularly on their work, on their activities, please don't hesitate to reach out. I'll share these slides with Samir, who can circulate them with everyone, and really do look forward to seeing what India does in the space economy and see the rise of Indian companies and for them to now compete more actively, as they've already been doing so, with space companies from all around the world. So thanks a lot, Samir.
Thank you so much, Hamza. That was really insightful. Thank you so much for all those details. Fantastic presentation indeed. So, does anyone have any questions for Hamza at this point in time? Kindly raise your hand. Louis, over to you, sir.
Yeah, hi, Samir. This is Lou Zaccarella with SSPI New York. Hey, Hamza, how are you? Very good. Great presentation. I just needed a point of clarification. You'd mentioned the amount of government spending or government-related spending in that overall investment snapshot. Did you say it was less than it was about a third now? It had gone down, the government-related spending or related to investment. Could you just clarify that statistic? I wasn't clear on that.
Yeah, absolutely. So put this slide back up on the screen. I think it's this study and this chart particularly looks at the size of the global space economy. So it categorizes government budgets as part of the global space economy. And according to this, those budgets were about 101 billion out of a total of 384 billion. So I'd say about 1/4 of the global space economy is now government budgets dedicated towards space. Yeah.
Yeah, and that's government acquisition budgets, correct?
Yes. And yeah. But I can share the study with you, and it has very relevant footnotes that guide a lot of the thinking behind these numbers.
That'd be great. That'd be very helpful. Yeah. Thanks so much.
Yeah.
Thank you, Louis. Thank you, Hamza, for that response. Anyone else has any question? If not, Hamza, I actually have a question for you. I know we are usually focused on the US-India bilateral, but what are the broader implications from other geographies, especially considering India is signing FTAs with UAE, Australia, European countries, so on and so forth? How do you see that playing out?
I think space is certainly one of those fields or areas where collaboration is key to growth. I think the space sector is really, an example of international collaboration and cooperation, with programs such as the International Space Station continuing to operate in a multilaterally collaborative way, despite very high political tension sometimes amongst the partners. So I think the relaxation of FDI rules and the signing of free trade agreements with other countries that are also having ambitious space programs, the UAE is a great example, really opens up the door for collaboration and joint activities. I think there's a lot of actors, particularly in the Middle East, that are at the moment have either developed or are developing space strategies and access partnerships closely involved with the development of several of these space strategies. And collaboration with regional leaders is a key element in these strategies. So, getting to space is very hard, and the more you collaborate and cooperate with each other, it gets better. So I think, a lot of space companies from around the world already use the PSLV rockets to deploy their satellites into space. And I think collaboration will only increase as these free trade agreements increase and with the relaxation of these FDI rules. Yeah.
Thank you, Hamza, for that response. Anyone else has any questions? Else we'll move ahead. Over to you, Keyur, to share your insights on export control programs where you had achieved some success recently. Talking of startups, I think Dhruva Space, a startup based in India, and Keyur is their legal rep. So looking forward to your insights.
Yeah. Hi, everyone. Good evening. Just to give a quick background about Dhruva Space before I begin. We're a full stack space engineering company, and we've launched about 4 missions so far. One mission with 2 satellites and other missions with various payloads. We're working towards our first commercial satellite mission, and how we are delivering our full stack solution is, one, we are building certain critical technologies in-house, and second, we are also building a vertically integrated supply chain to be able to deliver a modular and cost-effective solution. So the story of our export control, rather the story of success for our export application was unfortunately very uneventful in a sense, because when I was just thinking as the call was going on, what are really the points that I could best do justice to everyone on this call, I realized there are none, because the export control process was something very seamless. We were looking to get a certain star tracker, which, as most of you would appreciate, is one of the basic necessities in building a satellite. Now, when the question was there before us, how should we really go about this when we are building very strong relationships in the US, where we also want to down the line look at co-development, co-production, and probably extending the vertically integrated supply chain at a design level to the US. How far could we really go? So this first instance where we were looking at getting something which was essentially controlled and not a part of STA was to really test the waters as to how seamless could the process be. Today, the standard approach for any manufacturer when you're looking at subsystems or when you're looking at components which are key for satellites which would be controlled, you would typically go to a European market if you're a small satellite manufacturer used to a timeline of 3 or 4 months to build a satellite from scratch and launch it. Because the moment export control comes into the picture, and whether it is in the commercial control list or whether it is in the USML, the common perception is that you would typically take 6 to 8 months at the least, provided you're able to substantiate that your internal controls are right, your end use is accurate, provided you have enough background of having done the same activity to meet the basic criteria of getting the export control application through. To our pleasant surprise, I think we initiated the application somewhere in December. And I think as of 2 weeks back, we had an approval without ever having to nudge anyone for a follow-up, without having to take any additional steps out of the way. It was truly as seamless as our vendor applying for the license after getting all the due documents, which are pretty standard documents. There was no enhanced scrutiny, I would say. And I'm pointing this out especially also to show that in certain cases where the process has become seamless with certain enterprises, business teams do tend to complain that it's their regulation and risk teams which are not letting the order through, forget the government itself. With certain level of streamlining, even that was possible, where we were able to complete anything that is needed between the risk teams of the companies to assess and finish in a matter of days, not even a week. And followed by that, finally, when the application went through, all that was needed for us to do to know the status was go on the website, keep looking at the status, and uh, mentally, I think we were prepared to do something or nudge had a few months passed and had it not moved, because at that juncture, we were really ready with a backup option, which was already there with us. But it, I would say, was pleasantly surprising that the approval came through in quite some time. It didn't require us to go out of the way really and do anything as such. But there are 4 things that I realized we did right in the whole process, between us as Dhruva Space and between our vendor. And this especially applies for companies where you don't have a very streamlined procurement or a sales process, because as startups, you're always evolving and testing your products to see what would be your final line of products that you would use in building a spacecraft, or what would your component look like, where you can streamline it to the level of having a SKU number behind the model that you're selling. So the first thing that works out well is, I think, navigating through the regime first to find out whether it is something under the Commerce Control List or USML, or just to navigate the entire scenario to find out what applies. As long as that happens quickly, as long as there is clarity on that, there is no chance for the application to go back and forth, because that really helps you determine super fast how to go about actually making the export control application without having to come back with the right set of data. And that I really appreciate our vendors and partners in the US for getting that right. The second was when describing end use and when describing how exactly would the commodity be used, being very specific as to what is the exact use case you need it for, and in what satellite mission, when is it planned to be launched, to specifically address concerns like whether you are planning to send the satellite outside the country for launch somewhere where the commodity might go along with the satellite outside. So specifically addressing these nuances in that two-sentence end user statement was something I believe that truly helped us in uh, avoiding a avoiding an instance where an objection would come back. And the third, of course, was making sure that we are using it at the right places. We are quite transparent about what missions are there which are coming out, and not getting the basic details wrong. So with these three, we were able to make sure that things happened well. Of course, in doing the third, which is assessing whether your details are correct, uh, getting a simple compliance done with either a Bloomberg LEI number or a registration of the equivalent really earns the trust of our partners in the US often. So those registrations and getting those certificates renewed and up and going was a significant contributor in my belief, because those are checks which nowadays often happen before certain enterprises would even present a quote to ensure that there are no delays. So yeah, I think that's pretty much my uneventful but amazing experience with export control. And if there are any questions, please feel free to shoot.
Thank you so much, Keyur. Does anyone have any questions for Keyur at this point in time? Seems nobody has any questions. So congratulations, Keyur, once again, and thank you for presenting today. So one final insight from our end for today is that a delegation from India will be going to the US soon as a part of the IVLP, International Visitor Leadership Program, organized by the Department of State in the United States. So I think there'll be a bunch of private sector companies, specifically startups from India, that will be traveling alongside some officials from ISRO and InSpace. Just an update that I just wanted to share. I think there'll be more happening once the Commercial Space Joint Working Group will be activated. So these are the insights from us for today. Thank you everyone for joining. Wish you all a nice day and a nice evening. Take care, everyone. Bye.
Thank you very
Thank you
much.
so much. Thank you.
Thanks,
again.
everyone.
Thank you. Thanks a lot.